Hello everyone and welcome to Fluent Financial's What You Should Know for the week of February 7th, 2022. My name is Mike Lenise and I'm your portfolio manager at Fluent Financial. U.S. equities posted decent gains in uneven trading as mixed earnings reports and spiking interest rates kept investors on edge this past week. The S&P 500 and the NASDAQ composite indices rose 1.5% and 2.5% respectively, while the Russell 2000 added 1.75%. 8 of the 11 S&P sectors were higher, with energy jumping another 5% as crude oil reached $93 per barrel, up 5% on the week. Technology stocks were all over the board, but ended positive after Facebook plunged 26% and Amazon rallied 15% post-earnings and post-earnings guidance. Interest rates soared after Friday's non-farm payrolls report as January payrolls lifted by 467,000, which was well above estimates, and the two previous months were revised significantly upward by over 700,000. The 10-year yield leapt from 1.78% to 1.93%. This seems counterintuitive. You have good economic news, and that means a possibility for stronger growth. But that also means a more aggressive Federal Reserve and stronger rate hikes to control inflation. So the markets are spooked right now when you have good information coming in. Wage growth soared by 5.7% in January from a year earlier, nearly double the average of about 3% before the pandemic hit, while payrolls for prior months were revised up by a cumulative 709,000, and this could mean stickier inflation. Markets are even pricing in a 1 in 3 chance that the Fed might hike by a full 50 basis points when a normal Fed rate hike is only 25 basis points or 0.25%, and the federal funds rates could reach 1.5% by the end of 2022. The unemployment rate ticked up to 4%, largely due to labor force participation rates climbing to 62.2%, which is the highest level since the pandemic began. Overseas, the Bank of England implemented back-to-back rate hikes for the first time since 2004, and the Eurozone CPI or inflation rate came in at 5.1%, while their GDP or growth rate was only at 4.6%. Year to date, the Dow Jones Industrial is down 3.35%, with the S&P down 5.5% and the NASDAQ down about 10%. This coming week, the U.S. CPI or inflation number is going to be the most important release. Expectations are for a 7.3% year-over-year increase for January, up 7% from the prior month, which would mark the highest inflation rate since 1981. Other reports of note in the U.S. include consumer credit, trade balance, and to round out the week, the consumer sentiment. Earnings releases of note this week include Pfizer, Peloton, Disney, and Uber. On the international agenda, the spotlight will shine on the UK, with their Q4 GDP anticipated to have stagnated due to Omicron restrictions. Feel free to leave comments or questions to this post. Click the like button and share it if you feel that it was informative. Subscribe to our YouTube channel and visit our fluentfinancial.com website for further information. As always, thank you for tuning in to What You Should Know and have a great week.